So in UTI multi-asset allocation fund, we have three asset classes. First and foremost, equity, wherein gross equity allocation is always more than 65% to get equity taxation benefit. So UTI multi-asset fund is a equity-oriented hybrid funds with the equity taxation benefit. So always we are maintaining more than 65% equity allocation on gross basis. But when it comes to net equity allocation, the equity allocation range varies from 40 to 80%. Fixed income and gold allocation varies from 10 to 25% each. So equity allocation is dependent on four valuation oriented factors. So we studied various factors which are influencing forward market return, but we found that these are the four factors which are consistently having very high correlation with 1 year forward future, 1 year forward Nifty returns. Because typically we have seen that market tend to revert back to mean valuations, and depending upon different macroeconomic environment, valuations could trade at expensive valuation, or whenever people are fearful regarding a lot of negative news coming up from global side, mainly because of geopolitical risk or global markets heading towards tough time, typically valuations trade at cheaper valuation. So any asset allocation based on these four valuation oriented factors could have helped you generate slightly better outcome as compared to stable or static equity allocation. So we are using these four factors which are having consistently high correlation with 1 year forward Nifty returns. And in the sense, these four factors are complementing each other. Typically, any asset allocation model which is based on a single factor, which could face volatility associated with that particular factor. Since we are using multiple factors which are related to each other, at the same time, they are having their own characteristics. So, in the sense, stability of the model is far more superior using four factors rather than using one single factor. While when it comes to gold allocation, it is based on gold to equity ratio, which shows relative performance of gold vis-a-vis equity over long period of time. So based on gold to equity ratio, we are deciding gold allocation.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.